So coming across and closing out with minor pain points, right? Now with the halving is about 206 days away based on our current block estimates. So how do we know where the stress points are for miners? Well, we've got two models that we're going to look at here. The first one is a simple log-log regression between difficulty and market cap. Why I like this model is, first of all, the correlation is 95% in terms of the R squared. And really everything in the mining world, from from the miner's salary to the power contract to the geographical location to all of the information known about mining is baked down into one number: difficulty. Difficulty is the price to mine Bitcoin. And what we've essentially done is say, well, let's correlate the market cap, which obviously is the USD, that's the perceived incentive for miners, by the difficulty, which is how hard it is to actually get it out of the ground, for want of a better term. Now, with that correlation, we're looking for what is kind of the average. What is the middle? Where is the typical miner? What is that stress point of balance? And right now it's at 24,000. So it's about a 7% premium where we currently are, meaning miners are probably on the edge of their seats right now. We have another model which looks at it from how much issuance do you earn per unit of difficulty. So it's kind of like, what is the cost versus the reward? It's kind of another way to think about it. Now, this model uses a simple curve fit. So the red curve down the bottom here is the most efficient miners. It's curve fit to bear market bottoms. It's kind of telling us where is the survivor level. The miners that are super hardcore, have the absolute best balance sheet, and are ready to survive. What's an approximate cost for them? Well, now that we've got the most efficient miner, we can add our purple curve, which is the post-halving most efficient miner. Well, that's currently down at 15,000 for the most efficient miners, which, at 26,000, happy days. But that obviously jumps to over 30,000, which we are underneath. So if the Bitcoin price doesn't get above 30,000, and probably with a bit of margin to boot, we are most likely going to see some real stress enter the mining industry as we get closer to the halving. And once we go through the halving, there will be a lot of miners, as the price hasn't appreciated, that are probably going to be under stress. So just putting a flag in it now, depending on how things are looking, we will certainly be revisiting this topic, because I think the mining topic is certainly one a lot of people have interest in. So we will explore this in more detail, certainly as we get closer to the halving, because that's obviously where these things really come to bear. And you can actually relate the middle, the geometric mean between these two is the orange. It actually trades very, very closely to our difficulty regression model. So you can almost use those two as a bit of a balance.